In our Money Watch news today, First Citizens Bank has reached a deal to acquire Silicon Valley Bank.
The California lender collapsed earlier this month, rattling the entire U.S. banking industry, arguably the world. The FDIC had been trying to find a buyer for SVB since its collapse. And now here comes First Citizens, planning to take on all deposits and loans from SVB with support from the FDIC and financial regulators. The hope is to prevent further economic turmoil.
We want to bring in Wall Street Journal reporter Hannah Miao. How does, Hannah, this benefit, the deal itself, First Bank and its customers? And will the sale then be subject to tighter banking oversight and restrictions, or more than at least we've seen in the past?
Yeah, so First Citizens, with its purchase of SVB's deposits, loans, and branches, now is one of the top 25 largest banks in the U.S. So it significantly grew the size of the bank. And First Citizens was able to purchase these assets at a significant discount with the deal that it reached. It also got a bit of a sweetener from the U.S. government, with the FDIC agreeing to share losses and potential gains on the loans from SVB. And as for what this means for the greater industry, this is a key milestone in the efforts to restore stability to the banking sector. This has been going on for weeks. The government has been searching for a buyer, and now we have the buyer of a great portion of Silicon Valley Bank's assets. And in the wake of all of this, certainly regulators, supervisors of the U.S. government, of the banking industry, are looking to prevent a similar situation moving forward. So certainly it seems like we will be having more oversight and a retooling of the supervisory process going forward.
Right, and of course the effort is in large part to help stabilize the regional banking system. My mother has her money in a regional bank in West Virginia. Short of putting her on speakerphone right now, Hannah, I am curious, for everyday Americans, what is the guidance for where they should put their money? Where's the safest place for people to put their money?
Well, certainly the decision of where to put your money is a very personal choice based on each person's investing and savings goals. We have seen in the wake of the collapse of SVB and the ongoing banking crisis that many customers are choosing to move their money from regional banks into some of the biggest banks in the country because they think that might be a safer place. We've also seen this year a lot more interest in things like money market funds or treasuries. Given the rise in interest rates this year, investors are able to get more of a yield in those areas than they have for most of the last decade. And so while we can't make the decision for everyone on where to put their money, certainly that's what some of the moves that we're seeing people make.
All right, Hannah Miao, thank you very much. Appreciate it.
Thanks for having me.